Okay. How many people do we have on voice today? You guys know? Quickly or no? Just for
Hey, Bloom, it's Cuban. I'm on voice.
Okay. Please mute yourself.
I already did. I was just letting you know.
Okay. All right. So I'm going to start class now at 6. Hopefully it'll end in 45 minutes. Okay. I was thinking about how to do this class. It's a continuation of last week. I didn't finish off the topic. I think 30 minutes. We'll continue with 30 minutes, and we'll go into counter trend lines and counter trend lines, and then the validation, how to study the support and resistance line and actually kind of predict if there should be resistance will break or if support will hold. Okay, that's an intuitive thing. Not a lot of people teach that or even know it because it's really truly based on volume analysis, right? And then if we have some time, we'll look at 1 or 2 charts together. Okay, so that's the breakdown. So housekeeping, please everyone mute right at this point, mute your mics. Only I should be talking at this point. And if you have any questions, again, please write them in on the Discord, and then if we have time, we'll go back and review them. Okay. Okay, let's go through the vision statement again. I like to go through the vision and mission statement because it instills why we do the things we do, why we teach, and what kind of traders we are, and what kind of future we're going to build together. Okay. So the vision of the United Trading Capital is to deliver the highest quality of care and superior returns across all disciplines of the capital markets in a diligent and prudent manner to inspire the next generation of professional investors. The mission of United Trading Capital is to become the world's leading network for institutional and proprietary trading through mentorship with the lifetime goal of independent wealth and the continuous pursuit of philanthropy. So I want to pause here and talk about this phrase here, is to deliver the highest quality of care. The reason why I put that word care is because of this phrase here, fiduciary care. Okay. Fiduciary is a person who holds a legal, ethical, blah, 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 relationship party. Typically, a fiduciary prudently takes care of money or other assets for another person, one party, for example, corporate trust, yada, yada. Basically, once you read it, you're going to realize that when we talk about fiduciary care, that means I, Superbloom, and the administrations of this group have the responsibility to protect our members and to protect the capital markets, meaning we do not manipulate the markets and we do not go around front loading the capital markets. We do not go around pumping and dumping. We do not scheme. We do not collude together with other chat rooms to load a ticker, manipulate the volume, and alert the public for capital gain. Okay, we have a fiduciary care to our customers, our clients, and the capital markets. Okay, so I wanted to make that clear. That's how we do things around here. I will never compromise. We will never compromise our ethics to make money for ourselves, ever. And that's true too. I'll make this point clear. Sometimes I load a stock. I'm in this, guys, and I think this will break out. I'm in this at 57 cents, and then you guys get in. It rips to 64 cents, but there's no follow through. That means I'm still holding it. Okay. If there's no follow through, I will wait for it to go back down and tank, and I will take the loss. No follow through. It's on me. I'll take the loss. Okay. And I will show you. Pay attention. If there's no follow through and I'm in it, I'll show you a loss. I will never sell on the rip, so you guys will lose money. Money is not that important. Okay. So that's the ethical part of this. Okay, so let's continue on basically from last week. Okay, so I talked about support and resistance. We talked about the psychology of support and resistance. Those support and resistance are, in the broad term, they're trend lines, right? Trend line studies. support and resistance. And within the trend line studies bracket, there are counter trend lines, which I want to talk about really quick, because this counter trend line idea is important for the pattern breakout session next week or 2 weeks from now, to understand pattern breakouts, and then to understand pattern breakouts, and then to understand accumulation. Okay, so here, let's look at this picture really quick. It's easy. This is not meant to confuse anyone. So what I don't like at all is, when I first started learning, I watched videos. The guy who makes the videos try to outsmart the people watching it by putting in terminology that he learned from a book, that just try to confuse people to make him look smarter. And then when you find out what it actually is, you're like, oh, that's it. Okay. So really quick, this is just, look, right? What do we notice here? Is what I'm going to show you here. This is just a trend line. This is an upward bullish trend line, right? Easy. Hitting what? 1, 2, 3, 4 parts, right? Easy. That's what a trend line is, right? Rising trend line, right? Obviously, if it's going downwards, it's a downward trend line, right? The more times you touch the trend line, the more times it gets respected, right? Respected. People are acknowledging it, acknowledging this area, right? So it's true. Does that make sense? I'm going to try to just tell you in layman terms, okay? So when it gets to the complicated part, you guys will get it. Okay, so part number 1, and then 2, number 3. Okay, so here, let's go really quick here. Trend line. It bounced off once, it bounced off twice. Why do you think it's bouncing off the 3rd time? Why do you think it's bouncing off the 3rd time? And then on the 4th time, on the next time, it breaks down. Why is it that this happens? Right? Well, the first time, somebody's dumping their shares and somebody's buying back at that line, creates the first area of support. Okay? The second time someone's buying it, there's some emotion there. Somebody wants to get in at a higher price to keep. Someone wants to get in here. So they're buying it there at the second price. That's why the second location is actually higher. It's above it, right? It's above location number 1. So now now we can connect 2 points. But why is it that the 3rd time we see it bouncing off this trend line again? Why is it? What is it? What is this? Does anyone know why it touches the 3rd time? Okay, so the first time at the 140 line, it bounces. The second time, there's some impatience here. People want to get in. People want to get in on the second, right? We get that. People want to get in earlier. They don't want the price to drop. They want to get in longer because they feel bullish. But why on the 3rd time? Because on the 3rd time, people like us, the trend traders, we're traders, right? We're looking at these trend lines and we're going to buy at support. We're going to buy at these trend lines, right? This is a support line. This is trend is holding, right? We are going to jump in, and the new traders, the new volume, right? So this is important here. The new volume, we come in and we buy it at support. We buy it there. Okay? We buy it there. This is technical. This is charting. The new people like me, TJ, whoever, we're trading this. We're like, guys, we're seeing this trend line is now respected. Let's try to set the location on the location number 3 and put a limit order there and buy it. Right? Isn't that what it is? And then we are the ones that are keeping it up on number 3. Right? What happens here at number 4? On the 4th, we bought a number 3 thinking this will continue to rip up, correct? It doesn't rip up. It trades sideways, it trades sideways, it trades sideways, and then it comes back to that area again where it's holding that trend line, and then what happens? People start to lose faith in this, like, okay, this is not going anywhere. Nobody wants to buy it there, then it breaks down. Is that fair? Why it's breaking down? Nobody's buying there at where the 4th location. Exactly. But why is it? You guys have to understand the psychology here. What's happening? The first 2 points. The first point is people are dumping there. People are buying there. The second point, okay, people are getting impatient. They want to buy because they think this is ripping, and it rips. The 3rd time, new traders come in. New traders come in, we buy it, and then what happens? It doesn't go anywhere. On the 4th spot, what happens? It's losing interest. Is that clear how that is working, how the psychology is working? That's important, okay? That's important. I know it sounds like I'm making this up, but when you see the volume later, when I show you the volume, it's going to be clear as mud. It's just with here, there's no volume. Okay. You guys have to sort of understand what's happening here. Okay. So it breaks the trend line, a break of the trend line, it breaks down, it's breaking support and it's breaking down, right? You could short it here. Support is now gone. The trend line is gone. Support is now gone. Buyers are losing power. The bears are now attacking this line to break it down further, and there's selling pressure. It continues downward, right? So that's talking about the trend line, right? The break of the trend line, right? Some psychology there. Okay. Okay. So let's look at this picture really quick. Okay, look at this picture. Okay, those black lines right there are counter trend lines, right? Counter trend lines, okay, counter trend lines is basically just what the opposite of a trend line, right? So in this picture, I'm just going to use my the mouse here. Okay, this is upwards, upwards, upwards momentum, upwards momentum. And then I'm going to use my blue pen to connect these four dots to get these four dots together. Okay. So here it is. Okay. Here's what the picture looks like. Bear with me. That blue line there is that level of resistance. That blue line connects the top areas together, right? Those are all blue. That blue line connects the huge resistance line. Pretend that's a straight blue line across, right? It's connecting exactly. It's these areas are actually called the swing highs, right? The highest point of the chart. So it's actually connecting. So these black lines here are the counter trend lines, right? It's the opposite of the trend. This trend is up. These counter trend lines are diagonal. Why am I teaching you these counter trend lines? Do you think? It's not to make the technical charting more complicated, because I don't want to complicate you even more. There's a reason why. Look closely. Because every time, what's happening here? What's happening here? The first three counter trend lines, once they break, what happens? Once these counter trend lines break, what happens? A breakout is occurring. Is it not a breakout is occurring here? A breakout is occurring. Once the counter trend line is crossed, and a breakout is happening, right? Is that fair? Do you guys see that? Okay, so the first three, 1, 2, and 3. Breakout, breakout, breakout. On the fourth line, the fourth black one, the fourth counter trend line that we drew there, it does not break. What happens? It tanks. If this broke over the counter trend line, what are we going to see? A breakout. It doesn't break over the counter trend line, tanks. So, okay, mute that person who's coughing. Just okay. So is that important? Is that so? Support lines are important. Resistance is important. But if you look at it this way, is counter trend lines just as important? Counter trend lines is actually very important, right? Okay, so that's the idea of counter trend lines. It's actually so if the trend line is upwards, counter trend lines are the ones that are downwards, reverse, downward, opposite, counter, right? Okay. I know it's not coming together yet, but it will. Okay, so I have that picture. I'm going to show you here. Right? Read this. You would have realized if you drew support and resistance, you would have drawn horizontal across, right? What would you have drawn here? What you would have drawn is something that looks like this. Right? This is what you would have drawn, right? This is what you would have drawn. The blue line at the top is resistance. The bottom line at the bottom is support. Is that fair? What we would have drawn here? and said, okay, this is congestion. There's nothing happening here. But by drawing a counter trend line within congestion, what are we finding out? What are we locating now? What are we locating in congestion? Are you noticing what I'm trying to tell you here? This is why counter trading is so important. Counter trend line trading is a real trading technique in Forex markets. Okay, look that up yourself. Counter trend line trading. Okay, look, let's be clear on what this picture is saying. Okay, we drew support and resistance. Those two blue lines, square. That's fair from last class? Okay, Superbloom drew congestion, but now he's drawing the counter trend line, which reveals what? It reveals something that this, if it broke this trend line, it's a possibility that this is the entry that is going to make this rip to the top. Is that fair? Did I make this up, or does it look pretty that way? This explains a lot, doesn't it? The counter trend line is actually revealing a lot of who's trading what. Actually, to tell you the truth, right? Below, okay. So let's take a step back, okay? Because I think you guys are not seeing the whole picture. Okay. Here, from this end, from there, here, this is selling pressure, right? From that point down, the stock is being pushed down. Push down, right? Push down to a point. If we didn't draw our support line, we wouldn't realize that it would have bounced there. Is that fair? But by drawing support and resistance, and now the counter trend line, we could see exactly what's going to happen here. It's technically a squeeze. This is a squeeze, okay? Bear with me. If you're lost, say, hey, Superbloom, I'm confused as what you're trying to tell me now. So I understand, okay? Because the next point is going to blow your mind. This is why I felt the need to share this with you now so you can learn in the future. Okay? Okay, this is super important here. See that term here? What happens here? Look at this picture closely. There's a downward trend line. That's, let's call it whatever. The trend line, the counter trend line, whatever. It doesn't matter. It's just diagonal trend line. It's actually, it's actually the counter trend line, okay? And what's happening at support and resistance? See that line straight across, that gray line? When they intersect, what happens? That is for this one, it's called, this is confluence, right? I'm going to plant the seed today. I'm not going to teach confluence today. Confluence is probably the highest level of technical trading. This is using a combination of support resistance, trend line analysis, volume analysis, moving average analysis, like all that combined to create an entry point, one entry point. Why is it so important? Okay, so let's just plant the seed here for confluence, right? Look at this. Support and resistance is now touching the trend line. This is the exact entry I want to short at. Why? Because people that are just trading support and resistance will trade at that point, but people who's watching that downward trend line will also trade at that point. What does that mean? If I'm trading that support and resistance line and then TJ and his team is trading that downward trend line, we meet at that point. We meet at that point on confluence. What does that point mean? That means that is the point where there's the highest amount of what? Volume. This is why confluence is so powerful in trading, right? So when you are able to connect support and resistance together with a counter trend line, with even if we don't see this in this chart, but if for some reason it's possible, it's very possible that we see a moving average cross, right? We see a moving average cross there. What's happening there now? If we see a moving average cross through that point of confluence, what's happening there? That means we've invited who? We've invited more people into the trade. We've invited the guy who trades the 50-day moving average, who crosses over the 200-day moving average. We've invited them. We've invited more people into the trade. We've increased the volume for this trade. More volume into an entry point means what? Possibility of a continuation, reversal, or a follow-through, right? More volume. We're always looking for volume. So did I lose anyone there? What confluence means? I'm planting the seed now, but we're not talking about confluence right now. Okay? Okay, I'm not teaching confluence today, but I'm planting the seed. This is why understanding the trend line, the counter trend line, together with support and resistance makes us all even more powerful. Did I lose you there? Okay, I'm breezing through this, not like last week. I wasted a lot of time talking about psychology. Okay, so again, let's just review here. Right? Look at these points. Right? Same idea. Let's just hammer it home. Look, same idea, right? There's a downward trend line there and a counter trend lines, right? The downward trend is red, is downward. The counter trend lines are upwards, right? Those are counter to the main trend, right? Every time the counter trend line is broken, it tanks down. Every time the second time the counter trend line is broken, it tanks down. Is that right? Is this how we're seeing this? This is how channels are created, right? Okay, so I'm just planting the seed for the counter trend line study there. It's not hard. I know you guys are like, okay, yeah, it's not hard, but it's good to be aware of why there's sometimes an explosion at points, and you're like, why is there an explosion there? Like, how come there's an explosion there when I'm sitting there watching it and I don't really understand? It's because somebody is drawing a trend line, and actually 100,000 other people is drawing the same trend line or counter trend line, and they're trading it that area. Okay. I mean, at this point, I think this is overkill, but it's the same idea, right? Okay, I'm just gonna hammer it home here for completion's sake. I'm making good time. Okay, same idea, right? When those counter trend lines are broken, what happens? It breaks down. It is breaking down. Remember, when we draw support and resistance, what are we drawing? We're drawing what? We're drawing horizontal lines across, right? That's what we're drawing, right? We're drawing horizontal lines across. We actually miss the counter trend lines. Is that fair? Who here misses them? Who here doesn't realize the counter trend line exists in congestion, that people are trading them? Right? This is why it's important, okay? Because when you draw horizontal lines, you're actually missing this. This is why you can't capture the explosion. Okay? I think that's good for that's trend line analysis, counter trend line analysis, and then we'll go into, so I didn't lose anyone there, right? Good. Okay, let's just post this picture too. Right? What is this? Now I'm planting the seed for next week. Okay, look at this picture. Look at this picture. What's that top black line? What's the top black line? It is the counter trend line, apparently to this guy. Okay, what's that green line here? What's that? What pattern is this? What pattern is this? Is a flag, right? A wedge or a descending triangle, whatever. It doesn't matter. That blue line at the bottom is support, isn't it? The blue line at the bottom that I drew is support. Is that fair? You drew a blue line, but when you draw the counter trend line, now you could put together the pattern. And when it breaks out of the pattern, what happens? It breaks out, right? Is that fair what's happening here? So when you drew the counter trend line, it makes sense that an explosion is coming. If had you not drawn that counter trend line at the top, what would you have thought? You would have said, holy cow, guys, how come there's a breakout? And should I buy here now? No, wrong. People are trading this entry. People are trading that yellow circle there, a reason there, because of the counter trend line. The bottom blue is the support line, and that's actually a big flag, right? Here, I'll redraw it so you guys can see it. I'll draw it in red, right? This is actually big. What? This is actually a big flag, right? It actually doesn't even matter what it's called, really. You call it whatever you want. But it's a flag. It's a pennant wedge. Who cares? It doesn't matter. If it's breaking over your counter trend line, it rips. Okay, so that's trend line, counter trend line analysis. Understanding confluence. If it connects, if if the counter trend line is touching now support and resistance, we can create confluence, and that's a more powerful level of entry, right? And sometimes you will hear me talk about it, guys. This is confluence. This is multiple strategies combined for this entry, right? Okay, so that's that for. So we're going to move into validation. Okay, validation of support and resistance, meaning how do we know if the people who bought last year will come back this year and buy again, or the people who bought last year are not bag holding and are going to break even to us this year, this week, let's say last week and this week, right? Okay. So I'm going to post this. It was actually, I wrote it on my stock tweets for a reason so that I can remember. Okay, so I could remember for this class. I know I'm brilliant. I know you guys are like, this guy's brilliant. Okay. Okay, so this is the GNK. GNK, this is the validation of support and resistance. Okay, let's look at GNK. 0.1, 0.2, 0.3. Okay, there are actually indeed counter trend lines here as well. You know, like right here is one, right here is one. The blue line, right? The blue lines, right? Call it what you want. It doesn't matter how you draw it, but you get the idea of counter trend lines. Okay, so let's look at this chart together. Let's look at it. I have the lesson on Bloom Plays. I will teach you this lesson so you understand what's happening here. GNK today broke resistance at 1452 and went straight up to 1575. Okay, when I did this analysis, you could read it in my Bloom Plays. I said this would rip right through. I knew it will rip right through resistance. No doubt about it. How did I know this? Okay, look. First of all, those blue lines, those blue arrows that I'm drawing, those are counter trend lines, right? Those are trend lines. Call it what you want, but you have the idea now, right? If it breaks over those counter trend lines, what happens? It rips. That's another area of entry for this chart. Is that fair? Is that fair? Like when you draw it that way, okay, there's another area of entry here that I could take, right? Okay, so how did I know that today? Okay, let's look at this chart today on the 1 hour time frame. Okay, this is what happened on the 1 hour. I'm just choosing 1 hour. It's arbitrary. You could do it 5 minutes. It doesn't matter. It went right through today. Right? It ripped right through that resistance line. It went to 1575 and it dropped right back down. Is that fair? What's happening here? Okay. How come is it possible that in my notes I said this will rip right through? No problem. I didn't even hesitate. Why? Okay, let's focus. Okay, on my green circle, see? So this happened back in what? May? There was buyers there. Okay, so let's take one step back. Actually, this is the idea of commitment. I wrote the word commitment of price level comes from the Dr. Elder's book of Trading Psychology. Okay, and he explains it briefly, and I'm just going to elaborate on the idea of commitment. Okay, so when you buy a stock at $5, you're committed to that price. You're committed to that price. When the stock rips up 500%, you're still committed to $5 because you want to buy more at $5. Is that true? You're creating support. If it tanks below it, you're stuck at 5. Now you want to break even. No matter what happens after you buy it at $5, you're committed to that price until you're out of your position. Is that true? You're committed to it. You're stuck there. You're stuck. You'll think about it. Weeks later, oh man, I wish I bought more at 15 cents, or I wish I bought more at $3, or I'm stuck bag holding at $3. You're committed to that price. I wrote that in the Bloom Plays, okay? So for this lesson, you have to understand that idea. So look at number one on the left there. Okay, let's focus on there. Back in April, there's a lot of buying power. Buyers come in, it broke right through, and it tanked right down, okay? People are stuck there at 1452. People are stuck there, right? People are bag holding now. I know people are bag holding because they're committed to that price. They're stuck. They're bag holding. But look at my purple box. I see volume, I see trading, okay? But look at my red box. You see that red circle in the middle, entry number 2? Look what's happening when it retests that area back in September. What's happening here? That's making it clear for me that I know what's going to happen today. there's actually not a lot of people trading there for some reason. Look at the volume there. Look at the circle in the red volume compared to the green volume, the green circle prior back in April. Do you see what's happening there? It's clear as mud. When you circle it like that, you're like, okay, there's actually not a lot of people trading here. Why? Because they're no longer committed to that price level. Meaning what? They must have dumped their shares prior, back in the summer or something. They must have gave up. They gave up. They're no longer bag holding here, right? The resistance, the selling pressure must be gone. And the biggest giveaway that I knew that this was going to rip today was there's not a lot of buyers in this area. Back in, what is it? Let's focus here. This is a true area of volume studies, right? This is understanding what's happening here. Like, I'm really focused on this red circle. I'm really focused on it. I'm really focused on that. I'm saying, hey, look, there's actually not a lot of people dumping. I don't see a big red candle or a big red volume bar, and I'm actually not seeing people buying there. If I don't see a lot of people buying there, what am I saying? There's not a lot of people committed or stuck at 1450. They're just not stuck there because they weren't just trading there. They're not stuck and they're not just trading there. Get it? Is that clear? I'm pointing that out. I'm like, okay, I'm reviewing this area and I'm saying how many people are stuck there. 3 people only are stuck there because they bought and they're stuck. I get that. Okay, so that I can make and I can look. Then I go into area number 3. Right? Look at. Let's close in box number blue, the blue box. As it moves up towards the resistance, what happened? There's tons of volume coming through, right? Volume, green volume coming through. Buyers are coming in freely without it really tanking, really. I'm just looking at the volume. I'm not even looking at the... Wait, Discipline, are you serious? Am I not clear what I just said? Am I clear or do you want me to repeat it? What's the question? No. Okay, let's take it one step back here. This is critical here because you have to understand. You have to be able to read this volume. Maybe you have to read this volume properly. Look, back in the middle of September, there's not a lot of people buying and selling in that area of resistance. Like at that, if you go up to that price there, number 2, that point at 1452, not a lot of people are buying and selling there. That means not a lot of people are interested in that. They're not stuck there because there was not a lot of buy. If there was a big green bar, like 10 green bars in that area, then we could say those guys are bag holding now. They will come back now to break even. But because there was not enough buyers there, there's like only 5 people that bought. That means today, when it breaks through, only 5 people will sell. Is that right? Is that not right? Is that not right? Like logically, if you bought, like how many people here bought something in August, they're stuck and they're now waiting to break even today. If you bought back in August, you want to break even today, you will come back. That's what technical analysis is. It is predicting future price movements based on past volume and price analysis. That's what technical analysis. This is actually the definition of technical analysis. The word past. Okay, is that true? Is that true? What's happening there? If you look clearly at that red circle, like let's not move on until we get what's happening. There's not a lot of buyers there. 4 people bought instead of 1 million. That means only 4 bank holders are sitting there. Is that right? Okay. Okay, good. That's good. Okay. Okay. Let's break this down to the 30-minute time frame. Actually, no, not even. Let's do it on the 5-minute time frame to see actually what happened today. Like, I am actually surprised now that it didn't stay above. Okay. Okay, so this is the 5-minute time frame on GNQ over today. So it actually broke over, right? Tons of buying pressure. Wait, let me finish this. And then, yeah, let's just finish it there. Okay, so what's happening here? Today, it Truly, that's what happens. It ripped right through resistance at 1452 and it went to 1575 today. Okay. Nobody showed up until what? What can we say that's happening here? Like, I don't really know why this is dumping it. I don't know. Who knows, right? But the thing is, it didn't follow through. It didn't go to 16. It didn't go to 17. It didn't go to 8, 19. It didn't go to 20. It's because what? People just didn't feel, this is worth $15 or $15.75. There's no demand. There's other things more important that they want to put their money in, so they sold, right? So now it's dumping downwards again, right? But it really, the area of resistance at 1452 was clearly broken easily because why? We could tell from the analysis from the prior that there was not enough. There was no selling. There was no people bag holding. Okay, and the biggest signal, the biggest reason how we know that is the candle right here. Okay, I will point it out for you right there. Okay, this is volume analysis at the highest level of thinking. Okay, don't kid yourself here. You might get confused at this point. In this picture here. Okay, so look at that candle right there, and look at the volume bar. Look at the volume bar that is connected to that candle. Look at that volume bar. That's a big ass volume bar, isn't it? But look at the look at the small volume red selling pressure. Isn't that the low? It's low compared to the last two, right? Isn't it low? It's pretty low. People don't want to dump there. Because no one was buying back in August. Nobody even knew about the stock. They didn't care. There's nothing's happening. So this kept going up. Is that clear? That proves it. This proves it. To me, that proves it. That proves that nobody wants to dump because nobody had anything to dump. Is that right? This candle here, that red candle, and that corresponding volume bar at the bottom. Is that true? Do you guys agree with that assessment, if you will? I mean, do you guys agree between these three? What do you guys think? Yes, right? You agree. Next time you look at it, look, between those three people, there was the price dropped, but actually not a lot of people dumped. They actually wanted to hold this for this rip towards resistance. So, okay, so this is called volume. This is validation of support and resistance. I'm validating resistance by looking at the past. I'm saying if there's 1 million people buying this back last year, in the summer, those people will come back and try to break even here and cause that resistance, that selling pressure. But basically, we looked back at that red circle and we saw what? Nobody was even buying there. It was clear. It was clear to me that this was going to rip right through. Okay? Hopefully I didn't butcher that, but that's actually how you would study volume. This is volume analysis. You could read it in the book. Okay, this is validation. Okay, and that's not the only example. So I don't have an example readily available. So I'm going to use an example from Anna Couling's book to hammer this idea home completely. Okay. And this is going to touch upon this book never loads properly here. Okay, so an accumulation where I'm planting the seed. So when I teach it to you guys are like, I got this. It makes sense now what Superbloom is telling me. Okay? What's happening here in this picture? We have to study this picture now. Okay, let's go. Game on. Look at this. This is accumulation phase from the book, isn't it? See that red line at the bottom? That's support. See that red line on the top? That's resistance. We taught that. This is what? Congestion, right? Consolidation, accumulation. But what's happening in these blue areas here? Those blue, why is she highlighting it in blue? Because that is what? This is the validation that is going to hold, isn't it? Buyers are keeping this up every time that line touches support. Buyers are coming back to keep this up. That's how you read this. Isn't that how you read that? That's how you read it. You're like, okay, every time it touches, okay, look, it touches here. What happens? It touches here, it touches here, it touches there, right? Every time it touches, buyers are coming back to keep it up. Isn't this the definition of volume validation? Okay, if I see the setup, I'm comfortable knowing that this support line is now being held up by somebody, the market maker, the banks, a big chat room, who knows? But they're keeping this price level up. This support line is now what? Validated. Isn't that what right? Isn't this the validation? Isn't this validation? This proves to me that support is, and then what happens? So, right? And the person that's smart enough to what? See, I'm going to draw this in red. What's this red line that I drew? What's this red line that I drew? What's that red line? That is the counter trend line. Isn't that how this is working? The counter trend line. Every time the counter trend line breaks, it breaks. It rips over. Isn't this all coming together slowly? Okay, isn't this all coming together? Okay, I'm not going to go through accumulation today. That's a whole nother, but I want you to set it up. Okay, so I have 20 minutes. So here, we're going to walk through Archon really quick, right? Okay. Look at this. Look at this. Look at this. Look at Archon. What's happening in Archon? What are these lines I'm drawing? Wait, I know you guys can't see anything because I didn't show you. Okay, is this magic or no? What are these white lines I'm drawing? Those are counter trend lines, are they not? Are they not counter trend lines? Once it broke, it ripped. Did I make this up? Did I just like? Okay, so is it possible that when we looked at the chart, it looked like this? Here. Okay, wait. This is the price line, right? And okay, is it possible that I drew support at 320, and that line is the counter trend line? And so what's happening here? Whoever can answer this question, that person is truly understanding what I'm saying. 320, is that the support line? Hit support, previous area of resistance, right? Boom, confluence. Is this not confluence? This was the only entry on that chart today, 320. Who took that entry? Who was smart enough to take that entry? Exactly. Not me, because I was sleeping. I was busy, okay? But if I was there, this is what I would have drawn. Would you have drawn this? Tomorrow, if something is tanking, it ripped 300%, now it's tanking down. What are we now looking for, people? What are we now looking for? Confluence. We're only looking for that trend line to break and to bounce over support. This is only one entry here. Is this not clear? Is this coming together? Is that coming together here? It's making sense what Superbloom is saying? Yes, it does. Okay. Okay, so that's that. That hammers at home. Counter trend line confluence on that chart, right? You can draw this line. I mean, is it possible that, like, we were trying to scalp this, right? We were trying to scalp this up to this point, and we all got stuck, right? We all got stuck, right? But actually, the real entry is when that red line gets broken. I'm actually teaching this to you now because I should, when I was trading it, I'm like, fuck, I should have drew this line as well. Why didn't I draw this? So I'm reminding myself right at this moment in time that we should be drawing this counter trend line when something is tanking. That's our only entry over the break of this counter trend line, right? Okay, so that's that. That hammers that home. What else did I was going to teach you? Okay, so since I have 15 minutes left, let's go over one thing. Actually, I have 5 minutes left. Okay, so I'm going to pull my screener up for from FinViz that I use on StockTwits. Okay, so just bear with me. I'm going to show you the screenshot in a sec. Under $5. Now, how about under 10? Market cap. And micro. Nano. I want a super small, low flow. Okay, low flow. Okay, average volume over 200, at least over 200,000. Okay, oversold at 40. And float short interest over 30%. Is there any OTCIX? No. No. Bond? No, that one won't work. 15, no. DEST. DEST. Okay, PX. Actually, no, okay, so here I'll show you the screen. Okay. Really quick. Okay, here. No. Okay, so this is the screen I'm going to use. Okay. Okay, look. So price under 10, the market cap is 50 million only. So if you do the math, the float is actually going to be really tiny. The float, the interest on the shorts will be 15% of the float is shorted. There's volume here over 200,000. There's some volume here. Okay. Okay, and the RSI is oversold 40. Okay, and the reason this is really important here, oversold 40 is actually, it's just about to break over oversold and go into bullishness, this RSI. When you do it that way, at 40, because there's others, there's oversold 30, 20, 10, that's too oversold. When it just above 40, it's going to break over and start moving towards a new trend. Okay, so in this one, I'm going to look at, I've never looked, okay, I'm going to look at the DEST chart really quick, because I will help teach you how to figure out if this will accumulate. Really quick here. Oh yeah, okay, all right. DST would work, right? Right? Okay, let me draw my lines. 1 second. I'm gonna draw my horizontal line, support, right? There's support. And I'm going to draw my resistance line here. That looks good. And then I will draw my counter trend line. 1 second. I know you guys can't see anything. You guys are like, what the hell is going on here? Okay. So basically, let's start. We're going to look at some charts, right? This is the chart. Okay. Let's look at the chart really quick, right? It's support there, right? It bounced off support 3 times, right? Is it not bouncing off support 3 times here? 1, 2, and 3. Okay. My resistance line is drawn properly there. I think so. It kind of broke over resistance earlier and faded right back down. And my gray line is my counter trend line, right? So based on my picture, my entry would be what? I want my entry here. Bingo, right? That's just basic technical analysis. I want my entry there. I'm going to wait around, okay? Because if tomorrow support breaks, okay, look, for this chart, DEST, if I follow this chart and it does truly bounce off support tomorrow and it breaks over that gray line, what are we now thinking? This might make its move towards resistance and break over. Isn't that not true? Isn't that the idea here? Isn't that what trading would be? This is my signal. Okay. Because that's that. Okay, let's look on the 1 hour chart for the same chart. Okay. Yeah. I could see what's happening here. You could study the past from here. Look at this chart. Look at this. Look at what's happening here. Back in December 7th, it broke support, right? The next day, buyers came back from 225 and kept this price up. There's people wanting to buy at 225. And then from 225, it went straight back up to what? To $3. It went straight up for the next week or so. It just kept going up, right? It just went up, right? So tomorrow, if this was an idea for a trade idea, is it possible that we take an entry at 240 and have a stop loss in place just in case? And then if it does truly move up and up and up and up, we're going to be making money? Is it possible here? Just by looking at this chart, what the heck is going to happen? Is it possible? It is, right? And then here, I could tell by the volume, right? Look. Look at this. Look at the volume though. Study the volume. What's happening? There's actually a lot of selling pressure, keeping this price down. Buyers are not stepping back yet. Okay? So buyers are not coming back yet. I don't see any buyers. You know? Buyers, this is what, when I say buyers are coming back, this is what buyers look like. Okay? Look at this. Buyers. Right? This is what buyers look like. Look, buyers. Clearly, there's buyers there. And that red in between. No selling pressure. That makes sense. Right? Is that fair? So let's go back to this. Let's go back to the volume here to understand what's happening here. I see what? I see a lot of selling pressure. That's why this thing tanks. I don't see any buyers. I don't see anyone. Not anyone interested yet. So tomorrow, what I would do as a trader would actually be watching this from morning till end, morning till night. Like, okay, I see this tank to 225. I bet you tomorrow it will tank because I don't see any buyers holding this up. When this tanks to 225, I'm going to buy it. And then once it rebounds back to 240, I'm in at 225. I'm in at 225. I'm actually in under support. Isn't that what this is all about? Picking a ticker we like, figuring out support and resisting, watching the volume and taking the entry, like time that entry such that when it tanks and we catch the knife on it. That's what this would be, right? Okay. Okay, so I will just end with, let's just look at PXX. PXX is, I don't know what's wrong with it. I think there's dilution or something. This thing keeps tanking. PSX is on that chart as well. But look at this. There's two entries here. Clearly, no, wait. Clearly over to, no, and support, wait. Right? This program is free, so it's not like the perfect program, but clearly what's happening here? Same idea. Look, for PSX, look at the PSX chart, right? Right? There's support around this area, 150. If we wait around all day and it goes to 150, I want to buy this thing at 150 and hold it. Because what happens? It's held at 150. It keeps holding at 150, 150, 150, 150, and then it rips. Isn't that what this chart is telling me? And when do I, by drawing my gray line, my counter trend line, I'm actually trying to figure out the exact point of entry. When those two touches, confluence, remember that one picture? Remember that confluence picture? Remember that confluence picture I drew? Or not I drew, but I took off the internet? Okay, class is almost over. Don't worry. I know you guys are like, what the hell? This is bananas. And then you guys have a couple minutes for questions. If confluence is maybe a topic, what the? No. Yeah, okay, this is the same idea, whatever, you guys get the point. You guys, as long as there's confluence here, right? Right, this is confluence, right? Okay, so that's the end of my class for support and resistance and counter trend lines and trend line analysis. And we touched upon confluence today. Okay, planting the seed for a future in-depth study for confluence. And then we looked at accumulation in Anna Coulling's book, and we saw volume validation. And we used the G and K as an example, right? And then we looked at 2 examples today, PXX, and what else did we look at? Archon, and we looked at the other ticker, I forget, at DST. Okay, is it possible, right? This is how we piece it all together, and then we take our entry, right? We piece it all together, like PSX. I think my entry might be at 150 or near that area, 155. I'm just going to wait. I'm going to watch it all day, and if it tanks, I'm going to buy at 155, right? It's a proven point. It ripped from there, right? Are we going to wake up tomorrow and buy at 175? No, because at 175, it's congestion. If I draw it again, you're going to be in congestion. All right? So that's the end of the class at this point. Do we have any questions here for the topic? And TJ, do you have the...
No, you did great. Great job, man. I think everyone got the point.
Yeah, that's it? Or how do you use it, TJ? Because we use counter trend lines a lot. You guys know that in the flag pattern, the flag, there's a counter trend line, right? Like this is the flag on Archon. Like this is the flag. This is the red line is what? The counter trend line, right? So that technically is a counter trend line right there, right? The flag is ripping up the counter trend line. And once it breaks the counter trend line, what happens? It rips. It rips. This is why I'm like, okay, guys, over the break of this number. And you're like, why is it that number? It's because I drew my counter trend line. Right? 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 Okay. Okay. So that's that. Okay, let's look at some questions. Oak is helping me out. Oak 22. Please thank her, by the way. Like PM her. Why don't we all PM her and just say thanks? She's always helping in the back end. Okay, can you explain the volume relationship again? High volume on dip means what? That means there's a lot of buyers there. It depends on what kind of dip though. Like an attack, selling pressure, or buyers are coming back. I think you need to review that class to see buying and selling pressure on the candles. You can see buying pressure, right? You guys can post it. You guys are smart enough to post the buying pressure candle for Chanman. This is the buying pressure candle. We could see it, the hammer, right? We could see buying pressure, right? Tons of volume means it's validated is the one thing that moved, that reversal is validated. And tons of volume, if it's tons of buyers, means people are interested in keeping this price up, right? Okay, so wait, confluence is the point where you cross counter trend line. No, confluence, Google this word. I'm not going to teach it today. Google the word confluence trading. It's used. Actually, here, watch this video. Here you go. I'll post the video. Because that's a whole nother topic. And I'm using Adam Koo, right? This is the power of confluence and stock trading strategies by Adam Koo. Okay, confluence. Okay, what else? What other questions? Why do December indicate that there are still buyers? Oh yeah, okay, so for DEST, right? That's a good question. That's a good question, and I will spend a couple minutes to talk about it. Right, let's zoom in here. Let's really zoom in on this chart. Okay, is that the DEST, right? How do I know there's buying pressure? Well, I could tell by the volume. and I memorize this picture, right? That hammer there. What that hammer is showing me what? Buying pressure, right? Buying pressure, and then what's happening there? Reversal, and it continues upward. Isn't that what this is what is happening here? Is that what's happening here? Okay, who can tell really quick why on that day, December 7th, why there was such a big red volume bar there? Why was it so big there? What's more important in that big red volume there? It is what? That volume validates that this hammer is validated, right? It's validated, it's proven the buying pressure, and that what? It's actually not a lot of selling pressure, it's buying pressure. That red bar, you'll get confused sometimes when you study, is that red bar, although it closed that way, it closed red, but that technically should be green volume. Those are buyers coming back, stepping in, holding support up. See around green line there? They're holding it above that price for a reason. Are they not holding it above that green line for a reason? And what happens the next day and the day after and the day after? It keeps going up. Right? Is that true? It's fair, right? Okay, so what else? What other questions here? There were a lot of buyers and not many sellers. So does that mean they... There were a lot of buyers and not many sellers in PSX. Actually, Doji Gangster, I don't understand what you're asking me. Okay. No. So Cuban, you need to read the volume price analysis book. In the book, she says one thing. She says in her book, in one paragraph, she says, the biggest confusion to traders is understanding buying and selling pressure and what is actually happening in the volume analysis. Because sometimes it looks like there's selling pressure, but it's actually buying pressure. Just like that picture I drew for DAST, to the normal person, that red candle means like, wow, it was under attack. But because I know that, because I know my volume analysis and my charting, and here. Okay, let's break it down to the 4-hour chart, right? Let's do the 4-hour chart. This is the 4-hour chart. Let's break it down so we can understand the psychology here really quick. Actually, maybe even break it down to the 1-hour chart even. Oh yeah, okay. The 1-hour chart is more clear here. Okay, the 1-hour chart is actually more clear what's happening on that day. I'm actually going to just show you the 1-hour chart, okay? Look, is it clear now what's happening at the 1 hour? On the 1 hour, what's happening? Is it clear what happened? It's clear what happened there, right? It tanked below support, and then what? The next hour, what happened? Buyers started coming back in groves. They like, okay, we get this. We're coming back. And then what's happening on the next 3 red candles after buying pressure? Nobody wants to sell it here. They're done. I don't have any more shares to sell. That's exactly what's happening actually, to be honest. But I could read that right here. Look at that selling pressure on the 1 hour. They had no more shares to dump because they dumped it early in the morning or something. They don't have any more shares to dump. Is that fair? They don't have any more shares. How can you dump 1 million shares and then have another 1 million shares? You just can't. You can't. Right? But I knew that from the daily chart, that I knew that there was pressure there just by looking at it. So you had to get to that level, okay? I can't teach that. You have to read the volume analysis book, trade with us every day, and go to class and do all the homework. Okay? So I think that's it. No more support and resistance. I'm tired of it. And I will post. So for next class, I think next class is on pattern breakouts, I think. Is it pattern breakouts? Okay, so for homework now, can you put this? Start reading the volume price analysis book, right? Start reading the VPA book. Start reading it now. So when the class comes on accumulation and volume analysis, you understand what is happening. Okay, So next week is on pattern breakouts. So that makes sense, right? We talked about those trend lines, how those flags are formed, right? Those trend lines are formed, right? Good. I'm glad I finished this class. And it makes sense now, right? Part 1 and part 2 together make sense? Good. Done. So I will post the homework for pattern breakouts. There are actually 2 videos. There are actually 2 videos I like. Actually, no, that are on pattern breakouts. I'll just post one of them. They're only an hour long, just to get your feet wet. Okay, those people, to me, they don't know the psychology of the patterns, but there's a lot of psychology in these patterns. All right, class is done. I'll get the link.